Alright, good afternoon, everybody. Alright, hopefully everybody can hear me alright today. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. They would have turned the volume off on Josh's computer. Thank you. Position disclosure, I'm out of my Apple short. I'm out of my DJT short. I gambled some puts into the Etsy earnings that are not working out. And everything else is unchanged. Thanks, Rich. Okay. Let's take a look at some of these earnings. Meta is down. I don't know what the measured moves were for any of these. I wasn't really planning on trading them, but out of curiosity if anybody has them easily accessible and wants to throw them in so we can see what this move looks like compared to the measured move. I'd assume it's not matching it. But Meta down here after hours. Down like whatever, 15, 16 bucks after hours. Microsoft is all over the place. It's up very, very small right now. It's up like $1.50 from where it closed, which is nothing. Carvana crushing the game. It's up a lot. It's Etsy that I bought some puts on is up a lot. You know, I shouldn't have went against Etsy. I was just reading this research report, so I decided to take a shot. But I get my deodorant from Etsy. I use this company, and the stock is super beaten up into the report too. Actually, didn't look like the Etsy numbers were very good, but when a stock is super beaten up in the report, sometimes that doesn't matter. It's trading higher. Microsoft and Meta both look pretty good to me on the surface of things, but the reactions aren't great. Scrolling up here to find the numbers. We also have Roku out. Roku getting hit. We got Robinhood out. Robinhood getting hit. Oh boy. I almost could have chosen any stock to short except Carvana or Etsy. What was I just looking at? Microsoft? What's up? Scrolling up to find those numbers. Yeah, revenue beat, cloud rev beat. Yeah, these numbers look good. And then we got Meta here. The platform's EPS beats. Reality Labs operating loss looks like it is not as bad as expected. Platforms beats. Reality Labs misses, but no one cares about Reality Labs. Every other number here looks like it's a beat. So I don't know what's driving Meta down here initially. Those numbers look fine. I know it's not a huge move. Nor do I really know why Microsoft is not trading any better than it currently is, to be honest. Trading pretty flat, but we'll see what happens with the conference calls. If we get some guidance on the conference calls that can move these things a little bit. But for the moment, they are trading weak. So since those are not too exciting, to be honest, let's just dive into our usual afternoon meeting here. So right now, the SPYs are down 80 cents here after hours for us being down, enabling us to be down almost 0.5% on the day. The Qs are down about $1 after hours, which lets us be down about a percentage point on the day. And the IWM is down 10 cents, down 0.2% on the day. So all three indexes closed red, and all three indexes are trading further red since the close actually came in. Price action on the day was pretty sloppy. So this morning we were contending with Google being up on a really good earnings report, but AMD being down on a not great earnings report, and then to add fuel to the fire of a semiconductor sell-off, the SMCI disaster started, where Ernst & Young said that they are no longer going to be working with the company and effectively resigned, which accounting scandals are a disaster for companies as a rule. So even with that, the Qs were trading like fairly flattish pre-market. It was like Google and also Meta was trading higher off the backs of Reddit and Snap. So it seemed like Google, with its secondary being Amazon, and Meta off the backs of Snap and Reddit were holding the market up, whereas SMCI was hitting the market down. Obviously, AMD was hitting the market down, and then NVIDIA was moving a little bit as a secondary play. So it was interesting to see which one was going to outweigh the other. And in the first, 15 minutes of the day, this market was getting wrecked. And I was like, oh, okay, maybe we are onto something here, and there's some contagion in these semiconductors that, hurts everything else. So the first 15 minutes of the day, the Qs were really weak. Amazon was just trying to be strong as a secondary play to Google, specifically Google's clouds numbers, which were pretty good. By the third 5-minute bar of the day, this broke down and traded down into the ADMA and was never able to really muster too much of a bounce. Apple was trading really relatively weak all day today also off the backs of this QRVO earnings report, which I guess is some sort of supplier. So it gapped down as well and then was trading also lower. So I don't know, it looked to me like this market was maybe shot, and then we just had one of those incredible V-bottoms again. Incredible V-bottom, breaking the opening high, retesting $500, and then the market did a really good job sitting up here. I tried to press the short. I was patient on it, but I waited, kind of till we were getting up until this 21 EMA, into this, retesting highs, and then into this gap fill area. I was able to stick with it a little bit. So I was adding to like a QQQ short into this move, and was getting pretty close at this high to stopping myself out. We came back below 500, so I was monitoring it. And then finally, after being fairly patient, we got a little bit of a break lower that enabled me to cover a bunch of the Qs there. Then they were kind of boring all day and closed interestingly weak. So, and the Qs are the most interesting index to me right now because the SPYs are still in range. The IWM is kind of sloppy and in range, but was very strong off the open. The Qs are most interesting to me because they're the one index that has now broken out on the daily chart. So the NASDAQ broke out on the daily chart yesterday with a close at 500, a close above 498.50. They're reconciling this wedge to the upside. They're above the high of the negative Maribozu from October 15th, which I had signaled as a warning sign for the market that we could break lower. But that warning sign was no longer relevant when we were able to close above that level yesterday. So things were looking great for the Qs, not confirmed by the SPYs, which are still range bound, not confirmed by the IWM, which has been relatively weak off the interest rate move. Still have a warning signal from the interest rate move, still have a warning signal from the dollar, still have a warning signal from the VIX, but price action's what pays, and the QQQ technicals were looking really good. Again, I always really like to see continuity amongst the indexes that I'm looking at as far as the message that they're delivering to the market. Like, I want to see the Qs breaking out, but going with the SPY, going with the IWM. So getting one index there, it's nice and it's notable, but, we did not have full continuity. And then today, we were, pretty weak on the close. It's only an inside day, but we closed back below 498.50, which is the key level. So we closed below 498.50. It is an inside day. There is a chance that this is another failed move, especially if the Meta Microsoft earnings report fails to lift us up, or even worse, pushes us down tomorrow. So for tomorrow, we will be watching the inside day high and low once again. If the inside day low breaks and they sell down Meta and they sell down Microsoft, and then we, if we fully negate the low of the 1029 candle, this market is looking neutral to bearish again. If the inside day breaks up and we get back above 500, then once again we're back to full bull mode for the Qs. We have to continue to pay attention to the SPYs because the SPYs have not broken out. SPYs need to get above 585. SPYs need to get above the October 17th high of 586.12 in order for those to get clear. And then on the downside levels, the key level I think still to watch right now is 574.50 on the downside. If you start really losing 574.50 on the downside, we have our systematic selling number for the CTAs off the Goldman model. That's right around that area also. I forget what it last was. Tate, if you're here, maybe you can remind me. It's like 5750-ish, I think. And then also, I was looking at some gamma numbers for the market today, 5731, where it looks like we might have a pocket of like negative gamma below 5800 in the SPX. So if, and it's an if, it's not even necessarily the higher probability situation, if somehow this market breaks below this wedge pattern that it's building, breaks below 575.50, gets below the 5731 number, where the CTAs will probably begin to sell a little bit more in earnest and the systematics begin to sell a little bit more in earnest. And at the same time, we're then in a spot where the market is as like a pocket of negative gamma, we could still go into a feedback cycle of selling. With that said, the vol control funds, which are also systematic funds, they basically make their decisions off of, you know, the historic realized volatility with 1 and 3 month lookbacks. The 3 month look back of the August pullback is starting to wash out, which actually will most likely start to create a lot more demand from the vol funds that can create a cushioning effect on the market, still create an underlying bid to this market over the course of the next like 1 or 2 weeks here, potentially in a pretty major way actually. So I still think though that there is a window here where this market can break down, which is basically this week when we have earnings and we have non-farm payrolls, through next week where we have the election and the Fed. But I really think that if we start to get past next week and we still haven't been able to break down, then the corporates are going to be in full buying mode. There was never the sell signal that triggered for the CTAs. Vol controls buying again. It'll become increasingly difficult to have any sort of a bearish thesis in this market once we get past next week, especially then if the market also technically breaks out. So at the end of the day, know your technicals, know your technical levels. Because if we get through this next week and a half and the market holds in and SPYs get above 585, we could easily be off to the races, where we can start to realize SPX 6,000 or 6,100 by the end of the year. Whereas if we begin to break down and hit those levels, there still is a chance of, you know, markets working feedback cycles and selling lead to more selling. So bottom line is just know your key levels while we're stuck in this range. This like neutral to bullish range here. This is technically a bullish pattern, but like I said, everyone's talking with JR and Sammy today. It is a bullish pattern, but we got to keep in mind one of my favorite sayings in trading: from a failed move comes a fast move. So if we really begin to clear through those levels, in the back of my head, I've got my short button ready to go. But until then, we are still in wait and see mode. This market just refuses to really fully break out, even though the Q's improved. The RSP got worse, the IWM got worse, the average stock that was out there got worse, and the SPYs have just been stuck in this range. So if you lose the Qs because you get some not so great reactions to earnings, I say that as I'm seeing Meta just traded all the way back to flat, and Microsoft is now green. If you lose the Qs, then, you know, that's the only pocket of strength that this market has had right now. Though maybe you could argue that the dispersion trade still stays intact to some degree, and you lose the Qs just means that they buy up the IWM and the RSP again. But I think on the downside, we always see on the downside when markets really sell that correlations increase. So if we can break those key levels to the downside, then I think you begin to lose the dispersion trade and correlations increase and everything sells off together. But once again, it's an if. It's only if we actually get there. And I would argue that time is a bull's friend. The more time that goes by here without us breaking down as we get into this November period of time, which is seasonally bullish, and also if we get past the event risk without a big negative event, all the stuff, and this is why I got out of UVixy yesterday, stopped myself out of UVixy yesterday, even though it's higher now. All the hedges that market participants have on for all the event risk have to get unwound. And that's why you saw that like VIX 13 put play come into the options market that I think was for mid-December, because the expectation is that, you know, once we get through this, those hedges have to be unwound. The VIX worked its way back to $13, $14, and then you know, there just becomes an underlying bid to this market that's coming from people exiting those hedges, corporate buybacks coming back online, vol control funds buying, and no one having any reason to sell. It's pretty much all I have from the index level. Just want to read what Bill just said here. From a failed move comes a fast move thought. I've been thinking if we do get the up move we've been hearing so much about, that it will be quick. And if vol finally goes back to like 12, 13, I think I'll be looking for long vol. We'll see the path, but kind of expecting it to be fast. It just seems too painless any other way. Okay. Thanks for the thought process, Bill. I do appreciate it. We'll monitor it. So I do agree with being ready to jump on both sides of this market, no matter which way it breaks, though. Especially if the market's breaking up through that 585 post-election and post-Fed. The unwinding of that VIX stuff could create a very fast upside move in this market as it technically breaks out. I also think you could see a very fast down move if you begin to lose those key levels that we keep talking about. So, you know, we're building out a wedge in the market. It's a tightening pattern for the market. And another one of my favorite things that I love to say about trading in markets is markets work in periods of expansion and consolidation over time. We are in a consolidation period here that we've been in for most of the month of October, and it's been a very, very tight range for the SPYs. So eventually that consolidation breaks, whichever way it breaks. I think being prepared for a big move in either direction makes a lot of sense. So thank you for the opinion, Bill K. As far as individual trading goes today, I got out of DJT on the downside, so that trade fulfilled itself. It was really good. I think it's my second best name on the year, not on the year, on the month of October. So that trade worked out really good. I traded it very aggressively, got the full move on it over the course of these 2 days. I had been short Apple versus 235. I wanted to be in this for a bigger move, but, and this is the problem with earnings, I don't want to be short Apple into the earnings report. It could go down, but it's not one that I want to bet on, and I did not expect it to have a big enough of a profit cushion, especially with the size I had. So I still like my Apple short versus 235 idea, especially if the market can pull, and we had relative weakness in this today. But I liquidated my short into the down move on this thing. NVIDIA I traded really well today on the break of 140 pre-market, and then I retraded that into this bounce. Actually, I think there was 2 bounces. Yeah, it broke 140 down to 138.66. Then I like retested 140 at the open, so I was able to reshort into the open. Caught the full down move on that, liquidated my position, except for my little swing. Reshorted again on the retest of 140, but not as aggressively, covered it, and then was out of the way on this thing the rest of the day. So yeah, so NVIDIA was a really good one. We clipped the high of SMCI perfectly. I wasn't that greedy on it from a reward perspective, and I didn't have a lot of shares, but it actually paid pretty well for a small share size. But we clipped that perfectly. I love this trade. We talk about this trade all the time in news events and earnings events. The first test of a pivot in the ADMA area on the 5-minute chart. You know, 35, 36 was an important area pre-market. Off the bad news, they sold it down heavy to 32 and change. They ripped it up. They ripped it back through that 35 to 36 level. Where did they stop it? They stopped it into this 38 zone, which I think was also the spot that we had talked about in the morning meeting. Yeah, we talked about this like 37.50 to 38 as being previous support in the daily chart as a spot to pay attention to. And then that coincided with a pivot here into the ADMA on the 5-minute, which is just a trade that I really like that trade. That first test, wait for the pivot. Don't just necessarily short it on the way up. Wait for the pivot to come in as your signal, and then you know where your stop loss is, and then you trade in the direction of the original gap to see if you can get follow through. And that was a great trade. I think I shorted like 37. I shorted a few different prices, but like a short in like 37.50 was probably like my average price on that. Off this high, off that 80 MA to capture this move down. Just a really nice trade. Yeah, that's pretty much it. I did a couple other small trades and Lily with Josh and Google and Chipotle, but nothing worth talking about. I think that covers everything I have on my end. I'm happy to take a look at whatever you guys have. So starting with Jerry C in the VTF. I'm curious your thoughts on coin versus the recent performance of Bitcoin. It's perplexing to me. Interesting weakness on coin today. Oh, it's getting smoked after hours. Is coin earnings? Coin is earnings, right? It's getting hit after hours. What's Bitcoin doing? Bitcoin's been super strong. So
it doesn't help that MSTR just lowered their. They just said they're going to be raising more money to buy additional. Like MSTR is getting.
That's what they always do. MSTR, I really feel like is bound to blow up at a certain. Even if Bitcoin doesn't blow up, just the way they leverage themselves to buy more and more Bitcoin, like regardless of price, I just feel like at some point this company is setting itself to blow up. But it's trying to short this has been, you go to the loony bin off this, trying to short this name. Maybe this earnings report breaks it a little bit, especially if they're talking about raising more money. Maybe it actually finally breaks it now for the first time. So the first thing I would say to you, Jerry, is I don't follow these companies super closely. If I was going to give you one general thought process and opinion, I would give you my original bear thesis on Coinbase. I always felt that coin would underperform Bitcoin regardless of what Bitcoin does. Obviously, if Bitcoin does well, coin will do a little bit better. If Bitcoin doesn't do as well, then coin will do a little bit worse. But they're a brokerage. They're, like at least with like MSTR, they're moving because it's just leveraged Bitcoin basically. I don't even know if Coinbase is required to, as a company, holds any actual crypto. I'm sure that they have some, but they're really just a brokerage. And I've always felt that at a certain point that this hasn't really come to play in the same way that the equity brokerage space has become kind of a race to the bottom on costs, that coin would be as well. So I always just felt that inherently the nature of it being like a brokerage that charges pretty high transaction fees, that eventually it would lead to underperformance compared to Bitcoin. So that would be the only thing that I would point out. May have nothing to do with the fact that it's been relatively weak recently and Bitcoin's been able to go and Coinbase hasn't. Like I said, I don't follow these companies super closely to tell you all the nuances of the updated news that could be impacting it. But, Coinbase is not Bitcoin. It's a brokerage. So, like I said, you should see some strength with moves in Bitcoin or weakness with moves in Bitcoin, but it should, to some degree, trade in its own world. If anything, I've always been surprised just how closely Coinbase trades with the price of Bitcoin previously. So maybe it's losing that correlation a little bit. But besides that, I don't have anything for you. From Tate. I've been using this strategy for over 2 years, and after hearing you mention trend trading with SMAs and seeing Brian Shannon discuss a similar approach on Twitter, I thought I'd share it. I'll call it SMA continuity for now. The setup involves using the 50 SMA on the 5-minute, the 20 SMA on the 15-minute, and the 10 SMA on the 30-minute. So we have 3 time frames, 3 different moving averages, 4 time frames, and the 5 SMA on the 60. Okay. Well, don't they kind of line up? A 50 on a 5 and a 20 on a 15 and a 10 on a 30 and a 5 on a 60. Yeah, that's just in half and times by 2. So I would think that those moving averages all would always look very similar. These specific SMAs aligned on their respective time frames often create a similar price level with a typical variation of 10 to 30 cents depending on the stock's price. That makes sense. When the stock is trading above this combined level, it's a signal to go long. When it's below, it's a short setup. Brian Shannon also uses this strategy to add conviction when buying dips, often never below this level. This approach can effectively capture multi-session trends. I've included some examples below. Well, thank you, Tate. I'll take a look at those examples. Yeah, I mean, look, it makes perfect sense to me. I know Brian Shannon pretty well. I've met him in personally once, but I know his stuff pretty well. And he's one of those guys, you know, I've always really respected his approach to technical analysis. He's very much a keep it simple, stupid trader, which I think, you know, you can make a lot of money keeping things simple in this business by just saying, hey, you know, the trend is higher, I'm a trend follower, that's easier money, so I'm buying the stock, or the trend is lower, so I'm a trend follower and I am looking for the easy money by shorting that continuation. And then, you know, there's many different ways that you can make money in this business, but then whatever that strategy is, whatever that approach is, it still comes back to risk reward, probability of success, and game planning. Right? Game planning really being the manifestation of the risk reward and probability of success edge that you've developed for yourself as a trader. And those edges can come in many different forms. So, you know, you mentioned it at one point as a signal to go long. I would describe it more as a layer of probability, where you're looking for your actual trade signals, but maybe you have a rule for yourself that, you know, I'm a trend follower because that's the easier money. And, you know, what I do is I have rules in place for how to buy, but I also do it when my SMA continuity strategy on these different time frames also agrees with the trade, whether that's a long or a short, meaning it's a long because you have a setup that's above, or a short that because it's set up below. I love that. You know, I love that. And then I think you still want to have some sort of way to measure extension, so that you're not, like buying signals that are above those levels that are too extended that then give you a lower probability of success. And I think it's a different way to view a lot of what I try to think of when I look at markets, which I'm doing the same thing. You know, most of the time I would rather be with the trend than against the trend. Exactly what you're describing here. But I also pay attention to periods of extreme. Periods of extreme extension to the upside or downside. Extreme extension to the upside means that I don't want to be buying, regardless of my other signals, because I have a lower probability of success. And really extreme extension means I have another set of rules that enable me to put shorts on and go the other way. You know, similar with like what we did with DJT over the course of the last 2 days. Just looking at the examples. 8. So that's the 30-minute. Yeah, and of course then you have to train your eyes to look at these charts this way, because I'm not as used to doing that, where you're looking at the charts in that way on the different time frames, trying to pull that moving average for your confirmation. So yeah, I got to dive in a little bit deeper on these and take a look at them probably when I'm offline on your examples. But I like the premise a lot, Tate. So I appreciate you bringing that to the table. And anyone else that wants to utilize a similar approach, by all means, go for it. And you can use Tate as a reference for questions. I'm sure he doesn't mind. Curious of Mara and Riot. Mara and Riot, I think, would trade more with Bitcoin, which is still performing well. MSTR seems like it's trading in its own world right now because they're doing a capital raise to buy more Bitcoin, and Coin is also, you know, trading on earnings, so might get some secondary weakness, but I would still expect them to trade more with Bitcoin and less with those companies, but we'll see. From Rich, if you have time frame combination setups for the smaller time frame, trigger the bigger ones. And then we get small time frame risk and big time frame reward. Yep, I like it, Rich. Cool. Thanks, Tate. Popping over to the YouTube. I think I probably scared everybody out of the YouTube over the course of the last couple of days. So for the people that are watching, I appreciate you sticking with me. From you, Vixie Bull, what are your thoughts on SoFi earnings and the price action these past 2 days in here? Sure. SoFi looks great. So $12 really has been my target. Yesterday, pre-market on the report, it got to $11.99. I sold that print, by the way. I sold the $11.99 print. Pat myself on the back on that one, and then I kept like a little bit of a runner above 12. So I'm pretty much all out of this at $12. My buddy Stefan, who is really, really good on fundamentals, I know is looking for a lot more than me on this trade. I've also been in it for a really long time and have had that $12 price target. So for me, I want this thing to get to 12. I still have a position in it, and then I'll reassess. So pre-market yesterday, when it got to 12, I was almost out of my entire position, and then I bought this thing all the way back down yesterday per my game plan, and actually had a decent position again by $10 yesterday, and then I sold that position and then move higher again all day today. That's me just talking about how I'm trading it. To more directly answer your question, I thought that the earnings report was excellent. We have seen a lot of really good earnings reports come out of SoFi over the years, and almost every single one gets sold. If not the day of the report, then within a few days it gets sold back down. I think that this time could be different. Entirely because of the technicals. Entirely because it is above $10. So this was a SPAC. This thing has struggled and struggled and struggled with $10 ever since it got below it basically for the first time. It's never really been able to recapture it. There's been periods of time where it's shot above, again, for maybe a day or two, but then it comes right back down. This time around, it's holding above 10. You know, it got above 10, looked like it could fail off this extension back here on October 15th, came back down, satisfied that extension with a higher low, got back above 10, started looking great. Gave us some continuation, probably some of that was a short squeeze, got extended again into the report. I think that they sold this down on a really good report only because it was up so much into the report. But again, all that was a technical pullback into equilibrium, a retest of 10. Remember watching this 10 yesterday, knowing how important the level was for it to get above, and it tailed back up, closed above, and then gave us follow through to the upside today. So I think that this time might be different. I really do. I think that we finally might be looking at a time here with SoFi where they don't sell this report back down. Every single other time they've done it. So maybe I'm wrong here, but that's where my head's at on this thing. I think it looks great. I'm still planning on basically either fully or nearly fully liquidating my position in 12. But that's just because I've been in this position for a long time now, and it's just an opportunity for me to reassess and build out a new game plan and restudy the technicals and fundamentals and everything else. But I think it looks great. Thanks for the question. I talk to Stefan like all the time. I feel like I talk to him almost every day. From PB Freak. I assume that just means you love peanut butter. Can you talk about how you determine your price targets? Sure. I determine my price targets in different ways depending on the situation of the trade that I'm in. Paintball, gotcha. Paintball, peanut butter, same. So the type of trade that I'm in might call for a different way to do price targets. If it's a counter trend trade, then a lot of times my price targets will just be equilibrium. So for example, on DJT, shorting this thing, my price target was really just the 80 EMA on the daily. Shorting the extension, it's a counter trend trade. I'm just looking for it to no longer be extended. So the most ideal situation would be a full price correction to the 80 EMA. I'm surprised it actually worked as well as it did. More likely, I felt would have been a price correction combined with the 80 EMA catching up after a few days and me, just getting a move to these mid 40s and that being it. So that's for a counter trend trade. With a with trend trade, it depends on a few factors. How much am I looking to trail? How much am I looking to hold? I'd like to say ideally on like a with trend trade, especially if it's at all-time highs, that I don't have a profit target, because also, like we were saying in my conversation with Sammy and JR today, Sammy was talking about it. When a stock is at all-time highs, there is no resistance, there are no levels. What price target can even exist? All you can kind of do is trail. With that said, I believe to some degree in like fundamentals. So what I'll sometimes do in those cases is I will create extremely lofty, more like fundamentally based price targets on where I really think this thing could go if I'm right. So, SoFi, which I've, I was buying this. I remember, I'll never forget this day, August 5th here, 2024. That's the day that brilliant analyst at Wedbush put a sell on SoFi with a price target of $3.50. And I bought the absolute hell out of the stock that day because that guy's whatever. I'm only gonna say bad words about him, so I'll stop talking. So I'm buying this thing at $6-7, and at that, right now $12 doesn't seem like a lofty profit target, but when this thing is like basing down here at 6.25 and hasn't been able to break out above 8, and I'm calling for a $12 profit target, like target on it, that's a very, very lofty target, and that was more just me picking like a more fundamentally based target where I thought that the thing could trade up to, that leaves a lot of reward potential for me. Because it's kind of how I think about some of those more like bigger picture long trades that I'm in that are, potentially with trend or maybe a little bit more fundamentally based. Or I'm still kicking myself for getting out of Peloton. I got out of Peloton because I went on vacation. I'm so mad at myself. I've never ever liquidated positions to go on vacation, and I was just so stressed at the end of August. That was really played a part of it. I was super stressed with how crazy that August 5th day was, and I was having massive P&L swings throughout the entire month of August, that I said to myself, you know what, I'm gonna do what I never do. I'm gonna liquidate like a ton of my positions, blah 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 blah, and try to really enjoy my vacation. It cost me a boatload of money, to be honest. I had a target of Peloton for like $7, I think, and that was when I was buying this thing, looking for a buyout, really, which hasn't happened, but the stock still gave its move. I was buying this thing at $3 and under $3, and looking for a move to $7. It's just where I felt like the stock could belong. It's where I felt that if it got bought out, it'd get bought out up there. But I liquidated that. I just liquidated the position at like $4.60 and went on vacation. Snap, it was in Snap for so long, and I just decided to liquidate it at like $9.20 on like a lot of stock. And then when I went on vacation, now it's at $12.50, and I never got back in. Penn, this hasn't moved as big, but I liquidated this thing at like $18.75, and now it's trading at 21. That was one that I had a nice target on also. I know that there was even one or two others, but whatever, it doesn't matter. I don't need to go through all of them and just give myself pain and grief. It just kind of is what it is. But anyway, I just wanted to use Peloton as another example of how I come up with some of these more lofty targets. They're not really based in technicals as much as they are. A little bit they can be based in technicals, but they're more just based on where I feel like the stock can get to if my idea is right as I build into the position and trade around it. So I appreciate the question. From you, Vixie Bull, this price action makes me think it's done basing. It's SoFi. It's broke the highs prior to the initial sell-off. I'm holding most of my position for a while. Good stuff. I support you. Back over to the VTF. Nothing new in the VTF. Palantir. The Palantir getting hit after hours. I don't know why. Looks like there might be news. If anyone has that news, you can let us know. That'd be appreciated. All right. Well, if nobody has anything else, I will wrap it up there. And I will wish you all a great night. What needs to happen for this TLT to stop? Man, I don't know. I don't know. I think that the degree of the TLT down move is partially related to, it, like, and again, I don't want to upset anybody, but like 2 days ago when I was talking about how I feel that Donald Trump is inflationary with his policies, I actually do think that, but my personal opinions don't matter. What matters is that the market thinks that. So, you know, whoever may have gotten upset, again, I apologize if I came across crass, and I want to always leave things open for discussion. That's the biggest thing. I change my mind all the time. And I never express political views. I express what I think that the market is telling us on where there's a trade. And I think, and all the sell side research that I'm reading also backs this up, that the market is pricing in Trump winning, but that Trump winning is viewed as an inflation trade. And where part of that trade comes from, part of where you can see that, is in the gold move, it's in the crypto move, it's in the Mag 7 move, it's in the bond sell-off. Selling the news on the 50 basis point cut up here makes sense to me. Selling it from TLT 101.60 to $91 doesn't. So to answer your question, I think that you could potentially see a bounce back in this TLT and an unwinding of the inflation trade if Trump does not win. Because otherwise, this market's pricing. I mean, they're both inflationists, but I actually think that the market feels that Trump is actually more of an inflationist with his potential policies than Harris is. And again, I'm not saying anything about if I like him or dislike him or her or dislike her, or you know what my opinions are on whether it's good or bad. I'm strictly trying to tell you that this is what I believe that the market is telling us it's pricing in. And again, that corresponds with all the sell side research that I'm reading from the big banks are saying the exact same thing, that the market is putting on an inflation protection trade as they expect Trump to win. So we'll see if that actually happens or not. But if he doesn't win, then you may get some degree of an unwinding of part of that inflation trade, even though Harris is also inflationary with her policies. So to answer your question, maybe we get a relief bounce in this TLT after we get through the election. Even if Trump wins, maybe we get a relief bounce on it, because maybe they overprice it in and then you can get a bounce. So I don't know. You know, this market has been very hard, I think, in a lot of ways. I've been having really good day trading opportunities, and I've actually been trading well. I've had a really good like September, October period from my own trading overall, even though I do feel I left a lot of money on the table just with some of the positions I liquidated when I went on vacation. Even besides that, it's been a really profitable time for me, because I've been able to find a lot of these like really good one-off trades, like a DJT that paid me really well, or the Chinese trade. The China trade paid me extremely well. The index level of the trade, which I think also includes an understanding of what's going on with the election, what's going on with interest rates, and what's going on with the dollar, has been much more difficult. Because this market did not break down in October, is stuck in this bullish consolidation pattern, but it's not breaking in either direction. We're getting false starts up, we're getting false starts down, right? We have like what looked like a potential breakdown in the market happening on the 23rd. Then it looked like we're having a potential, remember the morning of the 25th? That was the Friday, right? How insanely strong we were just for us to close on lows. And then we get an inside nut that confirms the breakout just for us to then today close back below 498.50. Like, this is not easy. This is not like we're just breaking out of the technical pattern and giving continuation. The index level has been very hard. So that's why, you know, I started off the meeting and with what Bill was saying earlier, like, know your technical levels, because when this consolidation period really does break, it could break really big. And which way, I don't know. And the cause of it, I don't know. All I know is that we seem to be seeing the market to some degree pricing in a Trump victory, And the market, this is what the market's saying, this is not what Derrick is saying. The market seems to believe that Trump policies are inflationary in nature, and that's the trade that's getting priced into the market. And you can disagree with the market. I disagree with the market sometimes too. You still have to respect price, because price is what actually pays us. Like, sometimes I disagree with the market, but I'm like, all right, I mean, for most of October, I've disagreed with the market. I thought we should have pulled back more, and we haven't been able to break down. But I'm respectful of the price action. So you can disagree with that market message, and you can think that Trump is not inflationary with his policies, but that's what the market is saying. And then, if you're right, then that trade will have to unwind eventually in the other way, and you can make money off of it potentially. But that's all I got for you on the TLT. Whew. I can't wait till we get through this election so I can not talk about the election anymore for more than anything else, to be honest. I just really, really want to be done with this already. Have a wonderful night, everybody. See you all tomorrow. Thank you, everyone, for being patient with this political garbage that we have to talk about, and with my microphone and everything else I'm doing at the same time. I really appreciate everybody's patience, and that you guys all continue to tune in and be a part of this team, whether you're part of the team in the VTF or you're just able to follow along with those afternoon meetings in the YouTube channel. Appreciate you guys all following along. So if you are in that YouTube channel, give me the thumbs up and have a great night.
Dude, we're probably going to Industry Kitchen if you want to come meet us for a drink.